Welcome, everybody, to our briefing. We've taken a little bit of time off from our briefings to enjoy the holidays, but we're back with when should you take Social Security? One of the burning questions that we seem to get on a frequent basis here, and we hope it is helpful to all of you out there in Zoom land. So we hope you're healthy and safe. As always, we will walk through probably about a 20-minute presentation and then take questions and answers on just about any topic that you want to. We are joined today by Tom O'Gorman from our team, Millie Robinson from our team, and our resident expert in Social Security matters, Sharon Head, CPA, will be integral to our presentation today. And if you probably recall, if you read our blog, she did a blog on Social Security in the last 30 days, which pointed us in this direction. So without further ado, Sharon, you want to talk about the technical stuff and then we'll dig in?
Sure. If you have questions during the presentation, if you'll just find your toolbar, either on the bottom or maybe across the top or the right, depending on how it's set up on your computer, you can go to the chat box and put your question in there, and you can make it either private or share it to the group. And we will answer questions at the end of the presentation. Okay.
You will answer questions at the end.
Yes. Right.
All right. Terrific. All right. Well, let's get started. And I'll go ahead and share my screen here. I'll go ahead and share my screen here. There we go. So when should you begin taking Social Security? As always, when we kick off these briefings, we talk about our upside down pyramid, and we can't emphasize enough that as we look at investment opportunities, which certainly affects Social Security, when you should take it, and your planning, asset allocation is always at the top, and security selection is always at the bottom. And then we also always discuss total return is equal to income plus capital appreciation. We can control the income. We can't always control the capital appreciation, but that is the equation that results in total return. And over to the right, we have the our portfolio groups and the efficient frontier, which we've addressed previously. So Social Security, a little history on Social Security. It began as the old age survivors and disability insurance program and paid retirement benefits as a lump sum amount in its initial 2 years. The first program beneficiary, Ernest Ackerman, received a lump sum payment in January of 1937 of a whopping 17 cents. And mercifully, times have changed. But if Social Security continues on the track that it's on, we might be back down to those sorts of numbers based on what we're seeing about Social Security. So we're going to talk about three main topics tonight. When should you begin collecting Social Security? That's a question we get an awful lot. When should I start taking Social Security? Who is eligible? And then how are the benefits taxed? We often talk about the taxation of the benefits because it's not what you receive, it's what you keep. So that's always an important part of the conversation. So Sharon, would you take this slide, when to take Social Security?
Sure. So Social Security is a fairly complex system. It actually covers more things than just what we're talking about tonight, which are the retirement benefits that people receive. It covers disability benefits, survivor benefits, and a nominal other death benefits. But even under just the retirement benefit portion of Social Security, it's fairly complex. So usually, though, what people want to know is, what does this mean to me? When should I start taking my Social Security? Am I eligible? And then what am I going to pay in taxes, as Jean was saying? So let's dive right in and look at the when to take Social Security. I'm going to try not to drown you in numbers and nuances and all of that stuff that my little nerd heart really loves. But I'm just going to try to give you an overview of answering that question of when should you take Social Security. Did I mention that it's a complex system? So we're going to try to make it as as simple as possible to answer those basic questions. So on this slide, what you see is you can begin taking Social Security as early as age 62. But when you do that, you're going to reduce your benefit by 75% of what you would take at what's called your full retirement age. And you might see it referred to as FRA in Social Security terms. And full retirement age now is pretty much 66 and some months, depending exactly on your age, of when you would be eligible for full retirement benefits. And that's when 100% of the benefits would be earned and paid to you. However, if you delay to age 70, you could get up to 132% of benefits. So there's a lot to consider about the decision point of when do you take those benefits. So the next slide gives you a little bit more detail because it is a sliding scale from age 62 to really to 66, meaning that your benefit's going to be reduced by 25% at age 62, or as we saw in the previous slide, 75% of your benefits. And then you can see each place there. So like at 63, you're really going to receive about 80% of your benefit. And so the important thing here is to also notice in the next little piece of the chart, the benefits also increase if you delay your retirement age. So if your full retirement age is 66, which is what it is for most people now who are becoming eligible, then you're going to increase benefits by about 8% a year up to age 70. So that's 32% more than you would have collected. So it's, a natural question of, like what impact would all of this have? How do I make this decision of when to take these benefits? So on the next slide, we're going to talk about some of the nuances of how you might come to that decision. There's basically three categories. Your work environment. Is it an option for you to work longer to delay taking benefits? Most of the time, that's going to be the most beneficial to you is to delay taking your benefits. But then also, do you have availability of other assets? Employer pensions, personal investments, what else do you have that is available? Or maybe that you just have other reasons that you need to retire sooner, such as you've become disabled in some capacity, or you need to care for a family member that has health issues, or maybe you've been laid off from a job and you can't find another position. And so that might become your test, or your option would be to begin drawing Social Security if you're at least 62. Then health and longevity is the other thing to consider. And so the actuaries say that men will live to be 84 years old and women will be 86 years old. But one other thing to note is that out of those people, 1 out of 3 are going to live to beyond 90 years, and 1 out of 7 are going to live past age 95. So one of the things as I've been studying this, that the industry has put out is that a mistake that people often make when planning for their retirement income needs is they underestimate how long they might live. So to navigate these questions and all of these financial decisions, we have a financial planning tool, the Lifetime Financial Solution, that makes a lot of these factors easier to put some numbers to and to give you some indication of what might be the best or most advantageous for you. So hopefully this gives you just a little bit of insight into the differences in taking or the impact it could have of taking Social Security at age 62 or waiting to your full retirement age or delaying until you're age 70. Then on the next slide, thank you, is another important question is who's eligible to take Social Security? So one thing to remember here is that you have to have 40 earned credits as a covered worker. And most of the time you would earn 4 credits a year. And so therefore in 10 years, you would have earned all of your credits that are necessary. But for married couples, there are several variables to consider in taking Social Security that are not quite the same as if you were just an individual or single worker. So on the next slide, thank you. I'm just going to touch on this one area because we've actually had some experience with this with some of our clientele for spousal benefits for a non-working spouse. So even for a spouse who has not worked, or perhaps they didn't work enough to collect all 40 of those credit hours, they're still eligible under the working spouse's benefit to draw their own benefit. But there are several nuances here. There's no benefit to waiting to claim a spousal benefit beyond the spouse's full retirement age. However, that spouse that hasn't worked can't draw until the working spouse begins to draw. So that's just a couple of things there. There's no increased benefit for a non-working spouse that's claiming a benefit. And so, we just want to always make you aware of those things that are just different for a married couple. And there are several other nuances, but that's one that seems to come up at different times. We had someone recently that she had not earned the 40 credit hours, and we were trying to determine what the benefit would be so they could see what their retirement income would look like. But we couldn't add in her benefit until he decides to take his benefit till he begins claiming. And this is another point to remember here is that Social Security has online tools that are available by phone as well, or you can go in and make an appointment at the Social Security office and talk to an agent who will run various scenarios for you and help you determine what's the best scenario in your situation to take for benefits. But it's kind of important to know that that agent that you're speaking to may not have or be aware of all situations and circumstances. So you just need to be cautious, just as if you were calling the IRS for tax information and they tell you that they're not really responsible for what that agent has said to you. So you just need to be aware, and you need to check, we recommend that you would check your Social Security statement, which you can do online, or you may receive one in the mail, where you would find out, you can see there if your income has been reported correctly and what you have that would be there. And we would be happy to help you to walk through the various scenarios in the Lifetime Financial Solution in LFS. So that kind of brings us to that question of how much tax do you pay on those benefits?
Great job, Sharon. So I'll talk briefly about taxes. As I mentioned when we got started, it's not what you bring home, it's what you keep. So in order to determine how much might be taxable, you take all of your income except Social Security, and then you add back half of your Social Security benefits. So if that number, roughly, is less than $25,000 and you're single, or less than $32,000 and you're married, none of your Social Security is going to be taxable. If greater than that amount, then there's various steps up, but a maximum of 85% of your Social Security benefits can be taxable as ordinary income. So we find that most of our clients usually have 85% of their Social Security benefits taxable. Not always, but a lot do. And so what we do is we say, all right, let's do a break-even analysis of the tax that you're going to pay based on taking your Social Security benefits. Of course, at age 70, it doesn't make sense not to take it because you're going to pay the tax on it, but you're losing money. It's that window between your full retirement age or a few years beforehand and then age 70 that would determine when you should take it. And this is just one factor. So whether benefits will be taxable depends on your filing status and all of your other income. But oftentimes, if we're managing investment assets for you, we'll also take this into account because maybe we'll invest in municipal bonds or something similar that might not be taxable. So it all is a tapestry that gets woven together, and taxes are certainly a part of it. So as always, taxes and other factors will affect claiming your decision. So please contact us to talk about your unique situation. Whenever someone walks in the door and says, Gene, when should I take Social Security? My canned answer is, if you can tell me when you're going to die, I can tell you when you should start taking Social Security, because it's really a break-even analysis and nobody knows when we're going to die. But as Sharon so aptly pointed out, that longevity is getting longer and longer, and at some point, Social Security is probably going to be means tested for the benefits. That's a whole discussion, a whole nother discussion that we don't need today. But today we've tried to take what should be a fairly simple calculation. It is not, as Sharon has said, and walk through it. We've just touched on the surface of what that is. So Sharon referenced the Lifetime Financial Solution, and this is the process that we use. One of the things that comes out of this process is, when should you take Social Security? And that decision oftentimes changes. Once you do take it, you can't go back and undo it, though, for the most part. So the Lifetime Financial Solution helps us guide people on when they should take Social Security. And this talks about some of the various areas that we look at within the Lifetime Financial Solution and how it integrates with our investment management and how we collaborate with other advisors, particularly in this case, an accountant who would certainly look over and check the taxes on what might be taxable from the Social Security standpoint.